It is good old Samir Arora rubbing in hands. कल तो इंडिया में बच गए, आज क्या होगा?
Actually, क्या है कि कल का बचना was looking a bit odd because you could see the Nasdaq futures down, S&P down, and still we were on our way. So I don't know, but little bit we have to be part of the world. But otherwise, I think that the US market can fall much more. Now the question is, I keep saying that I learned from 2008 that we should not forget the world and not only concentrate ki what is our result and what is our EPS. But we haven't reached that stage in the US where we have to connect with them and say we will fall because they are falling. But I think they will fall more.
Uh, Parallels have been drawn that, okay, this is the worst day after March 2020. I mean, what happened to US markets last night? Parallels have been drawn that if this kind of an unwinding happens, we could be staring at 2008. Do you think it's that bad?
So maybe not 2008 because I don't know. But these things are very serious issue. And the problem is that at some level you have to agree with what Trump is doing. If you see on Twitter all these old videos of all these Democratic leaders also saying the same things from cost cutting videos, you can see Obama and Bill Clinton and Al Gore, and you can see these tariff hikes, Nancy Pelosi, all these guys actually believe in it or believed in it. And it's logical also that if Europe has a tariff on US products and that is okay, then why US having tariff is not okay. And also this is a complete change of the idea that, get me the lowest cost product. So there is some logic. Now the problem is short term versus long term. So if Trump really can ignore the short term, which is say 6 months, by which time the market, whatever has to fall, would have fallen, then it's not such a bad thing for them. And if they believe in it, and you can see President Trump's old videos of 25, 30, I don't know how many years old, he looks very young, but he's talking the same language. So it is not a new thing. So if they believe in it, we have to say that is the path. And one philosophy we have is we should not bet on what should happen, but what will happen. And what will happen is that after making such a drama, you do not back off so easily.
So, Samir, what are we staring at then? Further correction for US equities? And if that were to happen, you think India will also collide?
So my thinking is that US, we cannot say right now, but we have to see the response of China and EU and others, mostly these two only. And then because the idea is that if suppose US has said, I charge you 20% tax or 30% tax, and then the other country says, I will charge your products or your services 20% tax, suddenly do you think the next step will be, oh, sorry, I didn't realize that you can also put it on me, let's negotiate and bring it down to 10%. Or will the idea be, I am the buyer, I am buying $20 trillion per year. And just like in India, the government, in other countries, the biggest buyer government says, I want lowest cost, I want open bidding. So whoever is the buyer normally holds the cards. You look at, in the olden days when an Indian company would win an order to supply products to Walmart, we used to say, sorry, we are not interested in you getting this order because mostly you will not be allowed to make money because the size of the buyer is so big. So it's the same thing. So it can happen. All I have been saying is right now, India will outperform for sure, but it should not stand in the face and have massive outperformance. Then more people will feel nervous and maybe more selling will come. Just be a little bit cautious, but let it be as it is. But don't get excited that we are beneficiaries of something. We are not beneficiaries. We are just like every other country because they have scope to cut and say we will. For example, China can say, I will put a duty on bulk drugs. They can put pressure. What pressure will we put?
Sure. No, I completely get it. And you have to really take each day as it comes.
Yeah,
But
take
Samir,
each day. That is the best answer. Correct.
exactly.
Take each day at a time and just
Yeah,
and
because with
smile.
Trump, you really don't know, right? You wake up in the morning and he's made a completely different statement than when you went off to sleep. But tell me, as an Indian investor, what do you do? Do you rush to buy the decline should it come,
So,
or
no,
would
so
you do you wait for the poison to get out of the system?
no, the easier thing is not to buy anything connected to the US, which, by the way, includes pharma also. Because these things are not over. There are supposed to be sectoral tariffs coming in different sectors. The IT was a good one, which I played well. Now people can say, oh, I am reading my book. But the point is, I said it at the end of Feb also that we don't have. And that one is easy. What kind of guidance would you expect? So that leaves you with a very few things. And there you can be like financials and a little bit of local consumer and this and that. But don't try and buy a stock only because it's corrected a lot. Because, I was just showing to somebody, he was saying, is it time to buy MAG 7? So I said, do you know what was the price fall in 22? Okay, I'll ask you, how much do you think Meta fell in 22, or Amazon fell in 22, or Netflix fell in 22, or Spotify, all in the range of 60%. And Apple and
I
Microsoft
knew the
fell.
answer. I knew the answer. You did not let me speak.
Oh, I didn't. I didn't see you. Some images were coming. Point is, they fell 60% because some interest rate was hiked by 3-4%, right? Other than Meta, which could have had its own issues at that time. So when stocks fall, they can really fall. Not to say, oh, this stock is better, that stock is better. And I have learned that in 8 with my favorite story of HDFC Bank falling 52% while its earnings grew 30%. So I say, just be a little bit looking at, and every day, please see Donald Trump's press conference for 1 hour. I think it is very, very interesting, funny, and also you can learn a few things.
Aisha just said that when you go to sleep, when you get up, things will change. From 2 days, I have not slept only.
No, in the morning, I see. I hear it on YouTube. Even today, I saw his thing in the plane last
No, I've
night.
not slept in last
It has
2
a
days.
few
Does it
points
count?
which may be relevant, but I'm not telling you right now. You can
Okay.
go and listen to it if you want and see it. It will be appropriate for India today.
But let's look at something which, like HDFC Bank or HUL, companies which are completely domestic focus. Doesn't matter.
Correct. Correct.
So, do you see disproportionate amount of now premiums start moving back into some of these so-called domestic dominated stocks which have got nothing to do with US?
I think so. And, also it has to have a little bit of growth. So I won't say that for consumer staple guys, but there the only angle was that the FIs own it. And if they, sell because the US market is falling a lot, but otherwise domestic oriented with a little bit of growth, say 10%, 8%, as of now would be also good for parking. For some people, we want 10 plus 12% growth. But I agree with the concept, but I don't agree with one of the two names that you said.
Samir, at what point in time, I'm just being contra here for the sake of being contra. I mean, IT will become valuable, right? These are cash, these companies generate cash, they do buybacks. I mean, it is not end of the world. The tariffs are, that does not mean that US outsourcing will stop.
The thing is, we are all talking when we talk about these positions for 6, 9, 12 months only. That way, we can't be bearish on US forever because whatever may happen in the end, the valuations of some of these companies are good. These guys, as the US as a whole, always has the best innovation, best discoveries, new businesses, whatever. So we are talking only this period that for the next 6 months, there is high uncertainty. Then the other thing would be, for example, I bought Alibaba in last year, not because I knew what will happen, but it was like 6p, 5p. That's a different game. If you're buying something above average P, then you want a little bit of visibility. Otherwise, it should become 14p, then people will buy it anyway, like it used to be maybe in 14, 15 era. Then nobody bothered too much that what is the exact growth. They said, apne aap aa jayegi. But right now, it is still above pre-COVID levels with below pre-COVID, not below pre-COVID, it's at with less visibility for at least the large names, yeah. But you can say with lower pre-COVID growth rates. You can see it yourself for the larger names.
But Samir, when it comes to India, that valuation comfort is only in banks.
No, actually banks, there is a little bit of valuation comfort, but also that there can be double-digit growth, which you can't see in the IT guys right now. What do you think can be the guidance for some of these companies in April? I mean, right now they have to guide in the next, 10 days. How can they guide? You can see what is happening in US, which customer is committing to them such a visible this thing. Of course, individually they will, but in aggregate to guide for the whole firm, they will just guide 1-2%. What else can they guide? They can't even guide 5% according to me. In the end, whatever may happen, we will learn after 3-6 months. And therefore, all these, you call me every month for an interview, and sometimes more than once a month, and then you want from me to tell you a 10-year view, 5-year view, then you might as well call me once in 5 years. This is subject to today's situation, today's environment.
So Samir, on a 10% decline, what would you say that I would increase that exposure by 30-40%? I'm convinced whether it is Trump, whether it is tariff, whether it is China, whether it is something else, I think values mein hai. What would be that trade apart from banks?
So as I said, that would be that it has gone back. It's very simple on any of these valuation. This thing you can see what is the change in PE for these companies over the last 5-7 years, and some of them have had very high change. But we also used to buy them because the environment was such that you could still expect to get, as we say, 12-15% type earnings growth. We are not asking for 20% earnings growth. I don't even call a bull run as 20%. I say bull run is double digit, is a bull run. But if you can see visibly right now that some of these companies, like even the consumer staple type guys, will grow 3-4-5%, then what is the need to buy them? But there are many others we buy. It's not, if you see our portfolio domestic, we just finished our March month. You can see in April when these portfolios come out, we don't have cash in those funds. We don't have cash here. We are broadly buying something here or there. But I'm saying right now, today, yesterday, when the tariff was much bigger than expected, then there is no need to come in on day 1 and day 2. Whatever is there, plus minus.
I'll put some facts on the table here. One fact is that crude prices, whatever Donald Trump is trying to do, he will keep it low. Right? Second, directly, indirectly, he wants to keep the dollar low. So if dollar is low and if crude is low, two bugbears for India, can I say that on the margin, gradually, slowly, but these are factors which certainly will change your outlook and your earnings.
So we are already bullish on India. We are bullish on India, in relative, and in absolute if the world does not collapse. I'm only talking about that part. What I have only learned is if US falls with dignity, falls 10-12%, we can be flat up as a market, as it happened in 22 also. I am only trying to iron out that situation where the US market falls 20-25%. Then this oil fall and all will not matter. We mean the market will call it that this is because of recession fears. It is not because. So when recession type things come, when we all get dragged into being called financial markets rather than India, US, etc., like it happened in 8, where it didn't matter that your market, your bank did not have subprime exposure, that it did not need to raise fresh equity, that the earnings growth was still there without dilution. It did not matter, and mostly we fell more. So I am only saying for that you need 30 days, 15 days to see countermeasures, counter tariff, whatever it's called, reciprocal to reciprocal tariff, and all that kind of thing, which let's say 10, 15, 20 days. Now, during this time, or in our case for IT exposure, what is the risk that on 20th April, we'll say, oh my God, what a miss we made because this guidance was so much better and the stocks went up 8-10%. If they go up 3%, who cares? I think that probability is 0. Therefore, it's okay to wait. It doesn't have to fall. But what is the probability that will rise so quickly that you will have regret?
Yes, sir. All right, sir. So nice to have you. And only thing I think now we need to do is have some magic shows going. Kuch to magic karo ji, US.
Have tea, enjoy the long weekends coming up.
Which long weekend? Hamara to Monday working.
Thursday is a holiday, Monday is a holiday.
But there are many coming.
Next, yeah. April has a lot of long weekends.
Yeah, Friday छोड़ दो बस हो गया काम.
Chalo ji. Thank you.
If you like this video, then like, share and subscribe to ET Now.